Getting straight into the highlights for the year, the key features, see that both in terms of revenue and in terms of production, things were pretty flat. And that's notwithstanding the fact that there was a slight decrease in the gold price. Where we saw the changes coming through against the backdrop of what I just described to you were the costs that were up on a number of scores. Now, they're the typical dynamics that we deal with on an annual basis that have become predictable around Eskom price increases in electricity and so forth. But then there were also some dynamics particular to this particular year, where we relied more on the mechanical movement of material as a consequence of some of the volume throughput challenges that we faced, and those being related to both the weather and in certain instances also the supply of electricity into areas or units where we rely on municipalities, on local councils, as opposed to Eskom, where we just have curtailment arrangements. So those impacted on the bottom line, impacted our costs, and as a consequence, you can see that both our operating profit, although still very healthy at 1.7 billion for the year, and headline earnings, also still quite healthy at 1.1, both of those down by just over 20%. We still managed to pay our due, to make our contribution towards the fiscus with a very healthy contribution, total contribution of just over 400 million rand in terms of income tax and pay as you earn. And we're looking forward to seeing the value delivery that we as citizens of this country are entitled to see going forward. We will be pleasantly surprised once that starts happening. And then, of course, this is also the 15th year of paying a dividend, and a healthy one at that, of around 6%. It's a little down on last year, but a healthy dividend nonetheless within the context of what's been happening in the industry and also globally. See that women in mining remain virtually unchanged at 23%. It's an important number for us, one of our key goals that we set in terms of the transformation of our business. Socioeconomic spend, which has become very important, even more so, against the backdrop of rising discontent, 52.9 million rand. And then there's also been a slight increase at one or two of the areas where we measure dust. When we're getting to the bottom of this, we don't think all of that's from our own operations. I think it might be related to road infrastructure and also some construction in the area, but it's been monitored, it's been picked up, and therefore it's also been looked into.
Year on year, Ergo's revenue down by 6%, 3% of that sitting in the average rand gold price received, and 3% less in gold sold. Going to Far West, we actually showed a year-on-year improvement in gold revenue of 7%.
With regards to budgeted operating cost forecast, we've been fairly conservative in that regard. I think what's been factored in, I think it's, we're not hoping for lower prices. We were fairly conservative, especially on the reagent side.
The only one that is still outstanding on the cost, Nick, there is that the Eskom increases. So we've allowed for a significant increase, but we do understand that there was a case won by Eskom recently, and the full extent of how that's going to be implemented, we're not 100% sure. So that's the only portion which we haven't allowed for 100%, but we have allowed for a significant portion of that already. And then from a capital perspective, we've, as Neil has indicated, we're expecting to build or to spend approximately 1.4 billion worth of capital during this year, a significant increase in capital expenditure year on year.